Hello, friends. Friends, you have observed that in recent days there is a lot of discussion, conversation, and articles that are going on about the applicability of angel tax. It is claimed that with the recent budgetary amendment in the angel tax regime, now the angel tax is applicable on non-resident investors, means the foreign investors. So it is also claimed that if any investor, irrespective of its residency status, if he invests into any private limited company, that investor is liable to pay a tax. So before going into the discussion, we need to check or need to know all about the angel tax, what it is. Friends, the angel tax regime was introduced in the year 2012, whereby it was prescribed that if any investor invests in a private limited company and that investment is more than the fair market value of shares of that company, then the additional investment will be taxable as an income of the company. The rule was introduced in order to check the circulation of black money and to plug the loopholes. So the additional investment was made taxable, that is in the hand of company, not in the hand of investor, or the valuation of the shares of that company indirectly made mandatory. Now, this rule was extended to the non-resident shareholders. Most of the startup companies are private limited companies, and major investment in the private limited companies at the seed level or the pre-seed level comes from the angel investors. And the valuation of those startup companies is determined or arrived at on the basis of the idea on which the entrepreneur is working, the future projections, the numbers, and on the background of the promoters or founders and other aspects that is taken into consideration. So, if any valuation of the share of that company is arrived, that valuation is called the fair market value of the share of that company. Now, the trigger point starts. If any non resident investor, or we can say that any investor, irrespective of its residency, invests in that company and that investment is more than the fair market value of the share of that company, the additional investment will be taxable as an income of the receiving company, or we can say the investing company. So the additional investment, which is considered as an income for that company, so that income is taxable in the hands of the company, not in the hands of the investor. So saying that angel investing is now taxable is beyond the reality, because it is the company who has to pay the tax. That is only in the case if it receives any additional investment that is over and above the fair market value of the shares of that company. So the liability is on a company, not on the investor. So anything which says that now the angel investors, specifically the foreign or non-resident angel investor, need to pay the tax, that is beyond the spirit of law. It does not matter whether any investor is investing directly or through any angel investment network platform. It is not liable to tax at all. They can adopt any direct route or they can adopt any angel network route. So, the startup companies, the startup entrepreneur need not to worry, as well as the angel investors, specifically the foreign angel investors, and the angel investing platform need not to worry on the applicability of the tax, because it is levied on the company only in certain circumstances, whereas angel investing platform as well as the angel investor is immune from payment of any tax on its investment into the company. So keep investing, keep growing, keep leveraging the growing Indian startup ecosystem. Thank you.